And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the market forecast for Wednesday, Ash Wednesday, March the 2nd. As always, thanks for trusting me with your time. I'm John Hoagland. As always, we're going to be seeking accurate context, good risk management, and exercising patience. Hopefully you didn't party too much last night on Fat Tuesday. There was plenty to watch on TV. And again, it's Ash Wednesday, so happy Ash Wednesday to all of you who celebrate. As far as economic numbers this morning, 7:15, the ADP employment number came out, and it came out very well. They were looking for an additional 378,000. They got more than they were looking for. They got 475,000 new private sector jobs in February. 9 o'clock Central Time, the policy testimony is going to begin. Powell will be speaking to the House Committee on Financial Services. And 9:30, the EIA petroleum status is due to come out. Kind of a shocker yesterday in the API. But anyways, the things that are on traders' minds, of course, stocks posting a modest bounce last night, higher on early trade today after the State of the Union address last night. Crude prices, the highest in 9 years. Grain prices, highest in sometimes forever. Commodity prices continue to soar. We are still deep in the throes of inflation. EIA is expecting a 2.7 million barrel boost in crude inventories. The API was looking for the same last night at 3:30, but it was a shocker. They came out with a 6.1 million barrel draw. We've got our crude oil already moving towards one of the swing highs that we mentioned yesterday. We'll take a look at that on the charts again here this morning. And unfortunately, the war in Ukraine continues. Please pray for peace, pray for freedom, and pray for strength. As always, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome here at the Market Forecast. And subscribe to our YouTube channel if you're new, so you can get notifications when we do go live. VIX this morning off a little bit from the close yesterday, but still pretty steady up above that 30 level at 33.08. Dollar index really close to that 52-week high, 97.58, up slightly from the close yesterday, and the 10-year yield continues to slip a little bit, 1.77% this morning. Going to say good morning to everybody. Happy Wednesday. My brother Rick, first in the room. He wins the prize. I love you. Shaw, good morning. Aaron, good morning. Spencer. Crude likes to party while I'm sleeping. Well, I think the party's going to be going on for a while, Spencer. Brian, good morning. Marcelo, Theo, good morning. Isaac, Takian, good morning. Merrick, Zurain, Janus, Luis, Scott saw, and he conquered. Ronald, good morning. Terry, Bill, Charles, Bill Phillips, Vince, good morning. Jake Crockett, Alfred, let the good times roll. Denise, good morning. Dave Francis, Laura McLaren, good morning. Wen, Steven, Sarah, good dawn morning to you. Eric, Brett, Alex, Mr. Presto, good morning to you. Devant, Alessandro, good morning. Good morning, everyone. Jeff, Max, Spencer, VIX is painting a parabolic curve under the daily lows. Ngabo, good morning, and Eagle Flying, good morning. All right. Today's Wednesday. We're going to have group coaching today. This first link I'm popping in is for Make Hogue Money tomorrow at 8:25, right after the market forecast. I'm going to open a Zoom room, invite you in, and you're going to make the decisions for some trades. We're going to see how this goes. I'm very excited about it. I think it's going to be a lot of fun. I'm going to allow some random people the opportunity to speak so we can discuss efficiently. We're all going to vote on any trades that we take. We're going to have to try and be quick about that because quite often opportunities aren't around for very long. So we're going to take 5 minutes before the open in the S&Ps. We're going to watch the open in the S&Ps, and we're going to make some decisions. We're going to see how this goes. We're going to be doing them initially in Sim. If this goes well, I can see us transferring to real account relatively soon. Today, this next link is for group coaching at 1 o'clock Central. I saw a question on Facebook about how I set up the TPO charts on TS Trader. This would be a really good place to go. Yes, you can do the Zoom on your phone. When you sign up for it, you'll get, I think, some instructions on how to get it on your phone. All right. So again, to answer that question that I saw on Facebook, you come to the group coaching. If you're watching, make sure you get to the group coaching because then I can be a little bit more thorough on how I set them up and show you with greater detail in group coaching. So again, looking forward to that today. Excellent. Vince, happy Ash Wednesday. Dear God, please don't let our accounts turn to ash today. Well, it's in you, Vince. I know you, and I know you can profit. And I'm going to make a proclamation this morning, and you are going to profit today. I hope. All right. So, starting with the daily in the S&Ps, let's jump into the charts. I think one of our biggest and sweetest opportunities we've seen so far this morning is actually in gold. Let's take a look at them all. All right. So here's the daily in the S&Ps. We've got a fourth day, well, maybe a third day in balance. Structure is still in the medium time frame to the downside. Short time frame balance. There's so much data to do throughout the rest of the week. I think the market is a little bit confused on any direction that it intends to go. A lot of hedging and positioning for the next 3 days of information. We got one thing out of the way last night. We've got ADP announcing some good numbers as far as employment is concerned. We are still largely just waiting for any headline risks. Anything that changes, anything that occurs that's unplanned is a headline risk, and we need to be sure and be prepared for that. Yesterday, in basically a range-bound day, coming off of the high of that range, we added 10,000 contracts in open interest. Open interest is continuing to build over time. We've got a little bit of a 2-week period here where I think 8 out of the last 10 trading days we've added open interest. So there's a lot of energy coming into the market. It's going to make for bigger moves once we break out of this area of range. So we're just going to have to be patient and focus really on the extremes of the current range we're in. We're looking at kind of overnight low as an extreme of that range, maybe a little bit deeper down than that. But we've got a pretty, solid top to this area of balance that we've been. And my main focus is going to be on those extremes for some of the bigger opportunities. Anything in the middle is going to be a trade that I'm going to be looking for a good trade location, of course, but I'm going to be very reasonable with expectations on any profit targets anywhere in the middle here. So settlement is 43.0375. Put that on your charts. 1, 2, 3 days in range, in value, in the basic range that we put in on Friday, Monday, Tuesday, Wednesday. Not a double distribution trend day, but relatively close to one. We've got a high volume node below the market. We've got a high volume node above the market. Without some changes, without something to move the market away from where it currently is, we're going to be looking at a potential for a repair day where the market will return to the point of control here and then maybe check up to this high volume node up here and kind of repair some of the toothiness of this profile. We're opening in that area, and that is a distinct possibility. Spencer is pointing out something that is absolutely true. We're seeing value areas moving lower, but we're remaining in range and in balance. So good eyes, Spencer. We're always focusing on where value is leading price. So again, I'm going to be looking for this market to, without any new information, be kind of falling into a potential area of repair, which means I'm going to be patient as the market opens in value from yesterday. It's in balance, no gap, potential for repair. And anytime we open in value, it's going to really tell me that I'm probably going to be finding better trade locations as the day goes on. Of course, that's, again, barring any new information. Do we have any overnight inventory with which to talk about? Not really. It looks like we've got a little bit long here, but it looks like we've kind of reconciled those positions here before the open. We're going to be opening in 30 minutes. There's a lot that can happen. But make sure that you're always using stops. Always protect yourself. Always wear a stop. Let's take a look at crude now. Just getting to that crucial opening. Yeah, Spence, I don't really see any home runs either. So that's why I'm, going to be more of a fast trader today unless something changes and we get some acceptance outside that area of balance that we've been in. So I'll be looking for singles in the S&Ps today, if anything. Crude oil. We found new buyers on this substantial breakout above weekly kickoff high yesterday. Happened, pretty much in the overnight. Like Spence says, it's likes to party when we're all sleeping. Volume wasn't all that tremendous on that move up yesterday, although we did add 10,000 in open interest. Oh, no, I'm sorry, excuse me. We lost 55,000 in open interest on this move to the upside. Do you think that there were some perhaps trapped shorts that had to adjust that inventory when we broke out and we were holding up above that inflection level? Completely news driven. And where am I here? Yeah, I made that same mistake. I was looking at the S&P open interest. We lost 55,000 in open interest on this move to the upside. That new business was taking care of old business, it seems. Our swing highs. We just traded up to 112.51, 112.24 is a swing high from August of 2013. the next swing high from April of 2011, $114.18. And this the next swing high above that is $148.60, and that goes back to July of 2008. We're making historic levels here. Here's the 30-minute chart. Settlement 103.41. We had a pretty decent upside move. And settled basically right back in the middle. But now we were holding a whole bunch of overnight inventory to the long side. Much like yesterday, we had a lot of overnight inventory to the long side. These are short time frame, weak hands traders, speculators, pea shooters like me. Yesterday, they continued to get paid. They stuck with it. Today, on the open, if they don't continue to get paid, we may see the market pull back, close the gap, and a move back towards settlement would not be out of the question. I would be looking more towards the point of control from yesterday, which is 104.14. Let's take a look here. We've got our opening range already out there. Has not necessarily been all of that gratuitous for us, and it looks like I've lost that on my we're just going to eyeball this then. Opening range 110.93 to 110.51. 42 tick opening range, and we've taken our first look outside the opening range to the short side. Pretty substantial opening range. It did give us an opportunity to trade back into the opening range before it looks like before it extended. So if we're in the opening range trade here, we're looking at about 30 ticks of risk. And if we do end up continuing and unraveling some of our overnight longs, that could be a pretty substantial move. We're looking at this market, like it's in a small range, but it is not. It is a large range. I mean, we're looking at 100 ticks down to 109, and there's still space down below for an inventory adjustment, which may have been set up for 2 days now. So, I'm looking at that opening range as a distinct possibility. If I were in it right now, I think I would be relatively confident in it. We'll go back and see if that continues to pull off of those levels as we continue through the forecast here. All right. Nasdaq, very similar to the S&Ps. We're in the fourth day in range and in balance. Structure is, of course, the medium time frame structures to the downside. We've got a little bit of work to do if we're going to be changing this market state, and I don't see anything that's going to be doing that, especially considering the volume yesterday was pretty low, and we only added 650 in open interest in the Nasdaq. We lost a whole bunch in the S&Ps, and we added a little bit to the Nasdaq. So again, no new business coming in, just taking care of old business. Headline risks are out there. It's very news driven. We know that. Take a look now at the 30. No overnight inventory. Any overnight inventory has been reconciled back to settlement. This was a double distribution trend day. And if we open in the hole here, we may fall into repair. Again, repair. What is that? Well, you can see in the volume profile here, there's an area of distribution of volume here, an area of distribution of volume here. When we go into the middle of it, when we open in the middle of it, there is a tendency for the market to trade to the high volume node above and the high volume node below. It's like we're going to be heading or opening in that zone. So I'll stay patient and I'll focus on those high volume nodes for any early trades. And again, because of the situation, because of the range bound activity, I'm going to be really reasonable with any profit targets. I'm not going to take trades unless I see a 2-to-1 reward over risk is entirely possible and probable. And I'm going to be taking those profits, relatively quickly. If I get 2-to-1, 3-to-1 in a trade, I'm going to consider that a very successful trade in the current situation. Some news comes out, something changes, of course, that's going to change everything. But my initial hypothesis with the way things are lining up this morning is we're going to be patient. We're going to look for opportunities on these high volume nodes and see if we can't, make a little bit of profit, from those levels. If something changes, of course, we're going to take our next hypothesis and work with that. Gold this morning. Upside breakout yesterday above weekly kickoff high brought 13,000 in new open interest. Okay, there's been some new business coming in a continuation. That's usually a good sign. Volume wasn't all that gratuitous yesterday, though. Wasn't all that pleased about the amount of volume that came in, but we again did add 13,000 in new positions, open interest. We look at the weekly kickoff level in play here. It was in play first thing this morning on the opening range. Let's take a look at it. So the low of the opening range at 720 to 721 was 1924.60. The market opened and drove immediately back above weekly kickoff high. Support. The market is continuing to one time frame higher against overnight inventory. The overnight inventory was to the short side. We opened below and rejected below a weekly kickoff level, an important inflection level. The market is, it may just be taking care of old business, the overnight shorts. We're not seeing any real delta divergence here early in the session. It seems as though delta is congruent with direction. So, I'll keep my expectations again somewhat reasonable here. We had some pretty big range yesterday. But again, we have opened in range, in value, at an important inflection level. I think our best trade location for the day may be gone. So try and stay patient now because, again, we are in range and in value. There is a degree of balance to what's happening in gold here this morning. The euro. Continuation of the breakout below weekly kickoff yesterday. New business coming in. We added 12,000 contracts in the euro. That's a welcome sign because we've been really just kind of range bound, not adding new business. Now we've started to add new business at a different market state. We've been range bound. We are now looking at this market state to continue the move to the downside. I'm looking to sell strength in this market if I do anything. Take a look at the 30. So we got our opportunity at weekly kickoff high eventually yesterday. Continuation. Settlements here. 111.26.5 ticks. The market opening in range and in value. This was last week's low, this pink line here. Getting an opportunity before the open for an inventory adjustment, which gave us a possible strength with which to sell into. Not too sure about what I think about the current situation as for trade location. I'm going to try and see if I can't get some sort of a pullback back into yesterday's range before looking for an opportunity for a short. We remember we've got the dollar near a 52-week high currently. Take a look at the 10-year. There we go. All right. We're a pretty good boost in open interest. We're nearing the end of rollover for the Treasuries, so we're going to start to be able to depend a little bit more on volume and open interest. And we added 78,000 in open interest after losing about 300,000 in open interest over the last couple of sessions because of rollover. So we're starting to see money coming in, opposite of what everybody thinks that rates are going to do. Getting a decent pullback off that high from yesterday. Take a look at the 30. Lot of overnight longs. Market opened here, right here, and all of the activity from last night has been pushing price higher, indicating new longs or short time frame longs, weaker hands. They're so far getting what they're looking for. This is not even the right chart here. Jesus. Beg your pardon. Here we go. Settlement here. I was looking at the nat gas. I gotta be careful with that. Nat gas. We've got some overnight shorts in this market. 10 years. Look at the points, the naked points of control that we barreled through yesterday. I got to take all these off now because they've been revisited. Take those off. They are no longer visuals to target. So overnight shorts, it looks like they're continuing to get paid, at least for now. We've got a gap between Monday and Tuesday that's in an interesting spot because there's a naked point of control right in the middle of it. I'm going to be watching the low of the range from yesterday's regular trading hour session for potential opportunity. If we get into the gap, we may see the gap fill. It offers another opportunity to look for longs if that is in your wheelhouse. Now let's look at the nat gas. My goodness. All right. Volume has been maintaining the last few sessions here, but we've been basically in a range for about 10 days. We are breaking out of that range right now. This weekly kickoff high 476. If we continue to build volume up there, we may start to see a break in the current short time frame market state, which is range bound, and we may see this market continue. Yesterday, we added 5,200 in open interest, new contracts off the weekly kickoff low. Now we're at weekly kickoff high. Are we going to accept or are we going to reject? What does it look like on the 30-minute chart? And I'm going to make sure I get the right one up here. Here's the Nasdaq. We've got overnight inventory to the long side. Settlement, again, 457. And all of our overnight activity is to the upside. We've got a lot of longs, short time frame, weak hands longs in this market. Getting an opportunity to come back to settlement is an opportunity for us to be able to limit risk. We don't want the market to come back and spend much time or space below that weekly kickoff level, which is 476. We got a gap. Gap continues to get paid. If we can't close the gap relatively early, we're looking for opportunities to buy weakness. All right. So echo. So we've got our tasks upon us here this morning. It's Wednesday, half the week. We still have oodles of data due out. Just to remind you, the semi-annual monetary policy testimony today and tomorrow. They're starting those at 9 Central. Still waiting for EIA petroleum status report at the 9:30, and we've got the Beige Book coming out at 1 o'clock, which means the FOMC meeting is exactly 2 weeks from today. Tomorrow, jobless claims, a lot of jobs information this week, productivity and costs, factory orders, ISM services index, nat gas due out, and we've got a couple of talking Feds today and tomorrow. Friday, the unemployment numbers due out. That's it on Friday, but that is likely to be enough. Hey, my brother Tom is here. Hey, Tom, it's good to see you. It's a family affair. I got Mom stopping in. I got Rick stopping in. I got my brother Tom stopping in. It's good to see you. Lots of chat, you know, random thought. Why don't we just short and tank gold cuffing Pootie Tang. I don't know what that is, but until he gives up. Just a random thought. Ray, Rusty Golfer, good to see you. Yes, remember to be flat for unemployment on Friday. All right. See you today for group coaching. Don't forget about tomorrow's Make Money right after the forecast. 8:25. We're going to discuss what we're doing in the S&Ps, and you guys are going to make the decision as to if we take a trade, what we take a trade, and when we take a trade. You just give it about a half an hour. We'll watch the open. We'll see how the market responds early in the session. And again, you are going to be able to talk. If you don't have a microphone, it's okay. I'll get somebody else and get yourself a microphone if we're going to be doing this. And don't forget, we do want your feedback on this. I think it's going to be a lot of fun. I think it's going to be interesting. And you guys are going to have to make me money. It's just the way it is. All right, let's take our deep breath. Stay humble, grateful, and creative in your trading today. Say a prayer for peace, for strength, and for freedom. Get out there and profit today. I'm going to run down to the proverbial trading pit here in a couple of minutes. I'm looking forward to seeing you there. Looking forward to seeing you on the group coaching as well as the recap today. So we'll get a good look at what happened and what we think about maybe for tomorrow. Get out there and profit. Trade well. We'll see you later.